Shekhar, good morning. Thanks a lot for joining us. So, after this CAPEX, what kind of additional numbers do you see going forward in terms of revenue and maybe even in terms of profitability?
Hi, good morning. So the new CAPEX at Jharkhand, which was completed just a few days ago, increases our capacity by just over 30%. This will obviously directly translate to revenues and our bottom line in the next few quarters. We've got two additional projects that are in the pipeline, one in Uttar Pradesh, one in Odisha. In both these places, land acquisition is complete, clearances are underway, and as and when construction starts, we will give further updates on that.
Any expected date of
aside
completion?
From that, volumes
for these projects in Uttar Pradesh and Orissa, any date for completion?
So it'll be about 12 months from start of construction. We expect start of construction to happen in Q4 or in Q1 of the next financial year.
And what would be the cost of the project? How much would you be investing?
It's between both of them, it will be around 300 crores. That's the anticipated CAPEX as of now.
Okay.
But as soon as clearances are complete, then we'll have a more firmer idea on CAPEX numbers.
So this 300 crores is coming in from where? From internal accruals, or would you be at some point looking to raise debt as well?
Largely internal accruals. Our model, which is based on supply of ethanol, extra neutral alcohol, as well as consumer business, both value and premium segments. It's a high cash generating business model. Most of our CAPEX is funded through internal accruals, and working capital is funded through short-term borrowings.
So once both those projects are completed, how much does capacity increase compared to where it is now?
After both these projects are complete, we should have a total capacity of around about 1,200 KL per day. The caveat to this is, as I mentioned earlier, once the clearances are complete, that is when our capacities will get firmed up. But it'll be around about 1,200 KL per day once the entire CAPEX cycle is complete.
Shekhar, could you talk to us a little bit about how prices of your inputs are behaving? I mean, I think there was a big surge in the price of broken rice. You had moved to buying rice from Food Corporation of India. So that was coming to you cheaper. Could you just talk to us through what's happening now?
So the main increase in input prices we've seen in the last 3 to 4 months has been fuel prices. Raw material prices have been stable after the change to FCI. We purchase about 50% of our raw material requirement now from FCI. The other half is still from the open market. We haven't seen too much inflation over there. On the other hand, fuel has been seen a huge inflation in the last 4 or 5 months. Going into September, I see some of that softening, but up till August, it's been quite dramatic, the cost increase in fuel. We've been able to pass through some of that through increases in our ENA prices, as well as part of our consumer business. We've been able to pass on some of those cost pushes. But going into Q3 and Q4, we're seeing some softening. Let's wait and watch and see if this can sustain for a longer period.
Let's talk about volume growth. You had targeted 100 million cases by FY25. I mean, going by the crowds at bars and restaurants, I think it'll be easy for you to achieve the target. But you tell us, is that guidance still intact?
I think there's some misunderstanding on that. It's 100 million cases of addressable market. Where we are present in just a few states of India currently. It's Haryana, Rajasthan, and Uttar Pradesh, a little bit of Delhi as well. The idea is to grow our presence from around 50 million cases of potential of market size to about 100 million cases. And thereby, if we grow the size of the cake that we are able to participate in, we can potentially grow our own volume as well. And that was the meaning behind that 100 million number.
Okay, got that. So you are doing currently a little under 4 million cases in the consumer business, right?
There's around 12 million cases a year is our volume from the consumer business, about a million cases a month.
Okay, no, I was talking about 4 million. That's 4 million a quarter. Is
okay,
what
yeah.
you're okay? 3
yeah.
million a quarter.
3 million a quarter.
3 million a quarter. So what is the target at 12 million cases a year? What would the growth be for you over the next couple of years?
So at 12 billion, we expect this to grow by between 10 and 15%. Our premium brands, which are still very new in the market, those are seeing, excuse me, those are seeing much faster growth as compared to our value segments. There we expect, upwards of 50% or even 100% growth in the next couple of years. But overall, 10 to 15% is our estimate.
Shekhar, just to go back to that earlier point about sort of raw material prices, of course, fuel, of course, is a big one. But say, for example, rice, 50% of the rice that you buy is from the open market, and that goes up, right? Meaningfully. I mean, there are forecasts that that is possible as well. But the ethanol you sell, the prices are set by governments, right? State governments, etc. So it's not as if you'll be able to pass that. Is that a risk as you see it?
Not really, because all our ethanol business is linked with FCI now. We are not making ethanol from open market purchase of raw material anymore. And the material we purchase from the open market is used for the alcohol or beverage side of the business, either conversion to our own brands or sale to others for their brands. So, it's a well thought through strategy where, the sort of sticky business, the conversion business of ethanol, the raw material prices are fixed. The thing that is open is energy prices, which are expected to come down. But on the other hand, the market where we have a little more control on pricing, we have, the costs can move around there as well.